Welcome to SmithWeekly Discussions, an occasional program for our readers and listeners of SmithWeekly Research. Please note this program is a private discussion, and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. Before we get into our discussion, we want to say thanks for questions coming from our audience at SmithWeekly, including Levi B., Jared W., Luke A., and Mike P. So today we have on Marino Pieterse of Metal Commodities Investment Platform, a natural resource-focused platform of newsletters. Marino is the publisher and editor of Gold Letter International, Uranium Letter International, and Strategic Metals and Rare Earths Letter International. Marino, thanks for coming on.
Okay, thank you.
Marino, I want to get started by getting some information on your newsletters and kind of how long you've been doing this type of business, and kind of give us your background as well.
Okay, well, I started with Gold Letter International already in the late 80s. Let's say from 1980. Before that, I was an investment analyst actually focusing on the Dutch stock market. Have been working for an investment house specializing actually on the local gold market, and have been a vice director of that company until 1975, when I decided to work for my own account and still originally on the Dutch stock market. I had a market letter at that time dealing with the Dutch stock market, but let's say around 2000, I decided to go to let's say focus on the gold market actually, where I was very much interested in. Then in 2005 there was a turnaround situation in uranium. Was also an interesting situation there that was revitalized. So I started my uranium market letter in 2005, and then only a couple of years ago, then of course the revolution on electric cars, and a lot of companies actually switched from other markets into the metal markets. So that's for the last couple of years, and I am publishing reports on that, mostly on a quarterly basis in general, and also write some individual report on companies I like as an investment.
Well, that sounds great. And so you've been in the bulk of natural resource companies for a long time. What kind of metals do you like, kind of going forward, 2019, 2020, and kind of onward? What kind of stuff are you looking at?
Well, I see a little bit a kind of turnaround situation for gold. There is the situation that gold, I think, will benefit from the turbulence on the international financial markets because of, some other items, of course, geopolitical problems all over the world right now. And I think gold could have the benefit of it. Well, what you see now is it broke again through the 1300 level just the last few days. Well, I think I have a target there for 1400. That might not sound spectacular, but of course I'm looking investment opportunities in stocks. And then you see, of course, that even when the gold price goes up with $100 as it did in the second half of last year, that increases the profit margin. And so you really can say when you have companies with a profit margin of about, let's say, 300, that's the margin, then you get a lot of leverage in the stock market as such, mostly, let's say, 3-for-1, and that offers very interesting investment opportunities for the stock market, relatively better than just for gold itself.
No, I agree with you 100%, and even gold at 1,400, 1,500, you can do incredibly well with the equities, and I don't think it's not going to be difficult to get to those price levels, and so I think that gold has fantastic fundamentals over the next, this year and for the next couple of years, certainly. Do you see gold going higher from here, or what's your outlook on gold over the next couple of years?
Yeah, I see it higher, but based actually on the geopolitical problems. It is a little bit disappointing that when the situation worsened, and let's say we have, of course, the trade war between America, but we also have populism and so on in Europe, and we have the Brexit, of course. So these are situations which are actually influencing the market from a geopolitical point of view, and in the second half, even worsening the situation, you saw that gold was recovering from a decline in the first half. So when you look at the end of the year, the gold price was only, let's say, 1% difference when you compare it to the year before. So I think with the situation worsening in the world, that will be the trigger actually for the gold price.
Right. So when there's these geopolitical problems, do you see that banks, not just central banks, but other banks, do you see them adding to their holdings as a hedge against the geopolitical problems?
No, only when they have, let's say, economic problems themselves, which has an impact on their currency. They will actually hedge the situation and buying the gold like Poland did, like, let's say, well, Kazakhstan is a different situation at all, because also uranium is really dictating the uranium market, but they have money enough, so they bought. But when you look at the other countries like Turkey, well, you might know that their currency went down. Poland went down. So where you see the buying, it's limited to, let's say, the big gold holdings from Western companies.
Okay. Well, I'll tell you what, let's leave gold there and let's move on to uranium. What are your thoughts on uranium looking at 2019 and onward, and what needs to happen in the uranium business to see higher prices at this point?
Yeah, that's quite interesting, because I was the only one actually saying that optimism in the uranium market, I was very bullish in the last few years, was overstated when the price recovered. And when you look, let's say, in the statements of companies, they all they say, well, listen, there was a 30% increase in the uranium price, and actually one of the best performers. But I mean, it is just a recovery, because you know, like I know, where it's coming from, you know. And nowadays people say, well, listen, we go back now to the same situation as it was Fukushima, and they say, well, listen, it might go to 60 again, but that is impossible. What they really need is prices of 40, 50 to have a positive cash flow, operational cash flow, and we are still far away of that. And after the recovery to 30, I said already, what's very important is that you shouldn't look at the cash price, but you have to look at the long-term price. You can see in one of my publications in my website that I said, well, what is withholding the uranium price going up is the big difference between the spot price and the long-term price. So the spot price was at a certain moment 2 years ago, 18. That was the historical low. And at that time, the long-term price was 30. And when you look right now, we are 29 for the spot price, but the long-term price is still 32. What you don't read is, so only a very small recovery that, let's say, the prices are specifically set, long-term prices for 80%. And so the spot price is not important at all. It's actually what you need is a very small difference between the spot price and the long-term price, and that is settling now around 30. And I said, well, but even when it goes up to 40, what is possible, and you see that the cost price is between 50 and 60, I mean, we are in a very difficult situation. I am positive, actually, right now in the United States, because you might know that there's something going on that they want actually to increase the percentage of national gold to 25%, you know. And so what is happening, the president has to give his approval for it. It's a kind of situation going on that there are some commissions working on that. Well, we are now beginning of, I think in about 5-6 months, with actually to improve or say that the U.S. have to take 25% more of the national uranium supply rather than the 7% they have right now. So all the uranium required in the United States is coming from abroad.
Right. Well, I want to go back for just before we get to Section 232, Department of Commerce, the United States.
Yeah.
I want to go back to a comment that you said earlier. You said that more or less $45, $50 a pound is more of the incentive price. Do you believe that there is enough supply at that price to sustain the uranium price around that area, or do you see it more like what happened last time, where prices overshoot?
Yeah. Well, I don't know whether it's a different situation. There's enough supply. You know why? I have an overview of strategic geological blocks, okay? And when I tell you that what I have done is uranium required and uranium production, and then see where there is a surplus or deficit. So when you look at Kazakhstan, which is the number one in the world, you see that they have a surplus of 23,000 ton uranium because they don't need uranium at all because they still don't have any reactors yet. Then you see that Russia needs let's say 2,400. So that's a deficit on what they are producing now. And then you have Uzbekistan. They have a surplus and so on. And what you see is there's only one country right now, and that is the United States, which has a deficit of 18,000 tons. Now, well, you see that Kazakhstan is producing 23,000 tons. So Kazakhstan alone can supply full request of the United States. The United States can also have their uranium from Canada. They can have the uranium also from Australia. So altogether, there is no deficit at all. So, I mean, there is enough uranium available through Kazakhstan, long-term agreements between Kazakhstan and China, long-term agreements between Kazakhstan and Russia. Nobody is paying attention to it. So as a fundamental analyst, I'm really the only one having made these overviews and these statistics. And what is quite interesting is also that there's an agreement with Russia. Russia may not direct, let's say, have agreements with the United States, as you might know. So what Kazakhstan is doing specifically, they sent their surplus for a part to Canada, and Canada actually export that to the United States.
Yeah, no, I understand there's ways to beat around the bush and get it to where you need it to go, but you were saying that as far as the supplies coming out of Kazakhstan, so with Kazakhstan being a now public company, do you still see that Kazakhstan is still going to flood the market with their so-called production, or do you see that changing now that they're a public company?
No, they're changing. You never know what the Kazakhstan is doing. You never know what the Russians are doing. You never know what the Chinese are doing. So that's actually the problem when you want to have a fixed opinion on what's going on. But therefore, the hard figures point at actually what is going on, because Kazakhstan said that they actually would pull back their export of uranium for a couple of years, and that is used by other commentators and say, well, listen, that's not coming to the market anymore, so that will help actually the uranium demand. Let's say there would be friction in the market, but that's not happening because you see there's a lot of measures taken. And when you see that, let's say it's only went up from 24 to 29, you see there's already a consolidation in the market, which I already anticipated half a year ago. So, but even, let's say, when it would be to the benefit of Kazakhstan, I mean, they have so much reserves that they can easily dictate the market to say, well, there's a couple of years that we say, okay, we sell less, but they still have it as reserves, so they can really wait and see and dictate the market as they want. And I think they will be cooperative to let it go to 30 or 40, but not at higher prices. And what you see is a real problem because, well, you know, of course, Uranium Energy of the United States, they have been the number one company for a long time, but they are also the only company which didn't have any uranium reserves they could sell on the market, and actually as a compensation also for the operational deficit. When you look at the figures as I did, and you can see it again on my website, Sprott, well-known company, they actually are bailing Uranium Energy out. Otherwise, they would have been bankrupt. And the figures are quite clear because they need 20 million a year for a lot of overhead costs and other costs they are faced to. And they are not a producing company anymore. They were the first producer in the United States for a long time, ESR production. They were the first who are not producing anymore. So that means they have a shortage in the operational results of 20 million a year. And up to now, Sprott has helped them. But when the uranium price is not going up in the next year or 2 years, then we have a situation that Sprott will not going good money to bad money anymore.
Right. Well, Marino, you mentioned a lot of things there, and I'm not sure I can get to all my questions about these. No. But in the United States, looking at the three major companies in the United States that are publicly listed, Uranium Energy Corp, Energy Fuels, and UR Energy. Do you really see Uranium Energy Corp as really the better?
Yeah, well, at the current market price, it is actually. But because what happened is last year, UR Energy has always been a favorite of mine. But and I made a switch 3 years ago from from Uranium Energy in UR Energy. But they are a favorite because they are relatively low valued. When you see what the valuation is right now, it must be around 120 million. When you look at Energy Fuels, it's more than double that amount.
Correct.
And Energy Fuels has really had a very good performance last year. It went up by 120%. And at the same time, UR Energy, went up too. They are both actually in my short list of investment recommendations, but only 22%. So, I mean, when you see that they have a market capitalization of 120 million and Energy Fuels 250 million, Energy Fuels is the better company because they also on vanadium right now. But I think they are overvalued right now for the time being.
Okay. UR Energy is around 100 million market cap. But the difference is UR Energy maintained a couple minor contracts where they were actually taking and buying in the spot market and turn around and reselling to their contract to fulfill it. Yeah. Whereas Uranium Energy Corp has simply made a decision that they will not produce, but they will still consume capital. Whereas Energy Fuels and UR Energy have more strategically gone about it in a way that is clearly working out much better than what Uranium Energy Corp has tried to do, which obviously you can see that of the three, they all stink, but Uranium Energy Corp certainly stinks more.
That's right, but I totally agree with you, and that is underpinned actually by the market action that these two companies, Energy Fuels and UR Energy, had a positive performance last year.
So in the U.S. on the supply side, though, what do you see on your side as a total consumption on an annual basis in the U.S.? The U.S. has 98.
It's actually rather stable, as you might know, because when you see, and I have a head of uranium required is about 19,000 ton uranium. That's, let's say, an overview, which is updated actually by the WNA. So what you see, because we don't have the figures, of course, from 2018 yet, but when you look at the USA, they require 19,000 ton. Yeah. So that's a stable figure, because in 2010 I have that figure too, because I wanted to compare actually the pre-Fukushima situation compared to the situation as it is right now. And when you see in 2010, the United States required 19,000 tons, 19.5 thousand tons, and now it's 18.9 thousand. So that's a real stable factor. And they have access to it, so there's no problem at all. So even it wouldn't be necessary to increase, say, the national supply, because they have access to all these tons which are required. And it is only to stimulate the natural industry that, well, they asked, of course, action to support that natural industry. So that would also be to the benefit, of course, of energy fuels and your energy. So if this works out, and I think there will be a positive decision, and we have to wait for another 5 months, that makes uranium energy actually the best recommendation by choice.
Okay, well, that on back to the prices on, you're referring to 45 and 50.
Yeah.
So you were part of the cycle last time. You saw what happened last time. You saw the fundamentals surrounding the supply demand last time.
Yeah.
But this time, are you suggesting this time that there will be no overshoot and $60 a pound uranium is not going to happen?
No. I have to say no, that will not happen. And you don't need it exactly, but I mean, to make some money, well, even let's say when the situation is very positive, relatively spoken, for your energy, I mean, for the next couple of years, they have very good long-term contracts. You might have noticed that because they just published actually the report 2018. So, I mean, they are between, let's say, 40 and 50. But that's only for a couple of years, of course. And, well, nobody knows exactly what's going to happen. But what is happening? They say, well, listen, we are the only company which have positive operational figures. And let's say, but it's only a couple of million, We're talking about 2.5 million or so on. And when you have a company which is, let's say, valued at 100 company, even when it is relatively cheap compared to other companies, well, it's a very low perspective, of course. Even when they can make 5 million or double, will not really be very favorable for them, because they have to come out also, let's say, with gold prices which will go to an effective level of 40, 50 in the next few years. But it will certainly not happen this year, and even not next year.
Okay, so comparing to your experience last time, back in 2004 through 2007, the supply-demand fundamentals back then, the fact that there are more reactors, there's 455, 454 reactors operational. There is no shortage of uranium, and there is no shortage of people able to bring it out of the ground and get it to the utilities.
That's right. Yeah, and what is, I think, what's also not a realistic view is that they actually give overviews under construction, the plant, yes, but also proposed. When you see that for plant, you need, let's say, between 5 and 8 years. Proposed doesn't say anything. Because that can change. There will be all kinds of new situations that even, let's say, uranium will be replaced or technical innovations. So you really have to look to under construction and plant only. When you look, let's say, at the required tonnage, we should not forget, of course, that everything is now based on what is China going to do. China will actually activate or will introduce 6-7 reactors a year. Russia will do the same, also about 4 or 5 new reactors. When you look at other new countries, it's only a couple of reactors. And let's say when we look to the Arab world, they are also actually building reactors, even when they have a lot of oil, of course. It's only a couple of reactors adding to the total. When you go back to 2010, the Fukushima situation, nobody knew at that time what China was going to do, because let's say the plant and under construction of China, that is something of the last 5 to 7 years, so it's quite different situation.
Well, I certainly agree that there's no shortage of uranium in the world in the ground. I think that there is a shortage at these current prices of people being able to bring on economical projects and get supply to the market. Now, with that, do you see small modular reactors having any impact, say, in the next decade on supply-demand fundamentals? Do you see small modular reactors being widely adopted?
Well, that's actually negative for the old ones, because I see that adopted, and what is really serious, that the reactors will not come from the Western world, but also from China and Russia.
Well, there's no doubt Russia and China.
So they really control the world. People don't understand. We have a historical cycle, before, let's say, World War II, for this, let's say, the United Kingdom of the British Commonwealth dictated the world, And then, let's say, the pound was the number one currency. After World War II, let's say the United States was dominating all markets, and it is right now. So let's say the dollar is the main currency, and there is no alternative actually for the dollar. There's still people saying and thinking that the dollar will go down. Well, my question is, against what? Because you will have a weakness of the euro as the second currency because of all the turmoil there is in Europe right now. And I see actually that the European Union will face big problems also after Brexit with countries, including France and Germany, because there you will have, let's say, new governments in the next 2 years. And when you look actually to how you build an economy, you first need let's say, your fossil fuels, and in these emerging countries it is coal. China is 80% is still coal, and in these new countries, including also European Union, they can't just go from coal to nuclear energy. So also that is overstated. That is not a possibility. You can't go from, let's say, from the situation as it was 50 years ago and then say, well, listen, we just go to renewables. That's a real problem, which is overstated.
So what lessons did you learn during the last cycle that you are applying in this cycle with regards to uranium price?
Yeah, well, I'm looking from an investment point of view to situations in emerging countries. So I am also publishing individual reports on some of these companies. And quite interesting is that when you say there might be a shortage, say, in supply for China, that China get a foothold in a number of these countries, and not only in uranium, but also on base metals and also on strategic metals. So they are already dictating also uranium supply in some of these countries, including Namibia and Niger, which are the major countries actually. So that's also a way that if they need supply, they take it from abroad, and that's on all commodities.
Yeah, absolutely. Just like the United States took oil from the Middle East for a long time, and now look at them. So you, on this subject, what companies are there? A couple companies you want to mention, or maybe what do you like? Is there anything you like in Niger or Namibia?
Yes, I do. But first, I want to say I like Kazatomprom now because that's the new company, the big one. Yeah, and I would buy Kazatomprom and sell Cameco against it. And I have specific reasons for it, but it takes too long to do that to telephone. But you can find that information backed also in my reports actually. Okay,
so when you look at the broad realm of these uranium companies, you kind of have the producers, you kind of have the developers, and then you have the explorcos. What do you see as an ideal portfolio blend mixing these companies in context of timing, Section 232, Africa, leverage? How do you approach this?
Well, when you ask people for how many producers you have in the world, how many you think, you might know, but the people who want to invest in it don't. So we had 6 producers, and one of them is not producing. 2 of them are not producing for the time being, and are in a situation that they need, let's say, 10 at least $10 high prices before they can produce again. So it's very difficult, let's say, to choose under the producers. That is, well, we discussed it already, your energy. From a quality point of view, it's of course energy fuels, but they are too expensive. I think Cameco is too expensive, specifically when you compare it to Kazatomprom. When you go then you have to go, let's say, to the exploration development companies. And I have overviews there too, which I update every month. And there's the interesting situation that you have only about 15 companies with a market capitalization, let's say, more than 10, 20 million. So that's about, I have overviews of the 10 major companies, development exploration, focused on industrial countries. I have the same for emerging countries. And I couldn't even have 10 companies, let's say, above $10 market valuation in both sections. So then you see how small actually the possibility of the choices are. And I can nevertheless call a few of these. I must say where.
What's your favorite in Africa? What do you like? Do you like Niger better? Do you like Namibia better?
No, well, Niger is more settled, but I prefer actually Namibia. Yeah, my number one company there is Deep Yellow. Then the second one is actually Benaman Resources. Then we go to Niger, and that's my favorite one, well, is Goviax, Uranium. I don't know whether you've heard from it.
Yes.
And then there's only one other situation, and that's in Botswana. And these are actually countries which are relatively stable, you know, because, well, let's say when you have 20 African countries, there's only in a few is no corruption or whatever. So Botswana, so then you have, let's say, so 2 in Namibia, 1 in Niger, and Goviax has also interest in other African countries and Botswana. So these are 4 companies. Then you can go to, well, whatever. I went to a Plateau Energy focused on Peru, but they are, let's say, what I said already earlier, they are also, let's say, in other countries, and some of these uranium companies are actually going into vanadium and in lithium. So it's not only pure uranium companies anymore. When we look, let's say, Africa, I also have to mention actually Aura Energy, which is active in Mauritania, and I'm working on it right now. I think that is the most interesting company of all of them. You know what the problem is? And that is, let's say, the Australian situation, how Australian stocks are valued, because these are all penny stocks. They have market couple of million up to billion outstanding shares. So these are penny stocks and have a relatively small market capitalization of 20 million. So you might know that, let's say, professional investors are normally not allowed to buy penny stock. So when you see that they are 1 cent now, and they are very advanced in Mauritania, and also have a very good project in Sweden. When the price goes from 1 cent to 2 cents, you double your investment, you know. And I just wrote them a letter and said, well, listen, this might be a problem from, let's say, an investment point of view. So you should actually come to a consolidation, because there are some other Australian companies that they did a consolidation, but still, let's say, most of these companies are penny stocks, and I don't understand that you use penny stocks actually rather than have, let's say, the possibility for serious investment funds to buy a stock in Australia.
Right. Well, let me ask you a couple of questions. I got a few questions based off what you said. Some of these companies, like the one you mentioned in Botswana, ACAP, and some of these others, they have heavy Chinese investors that own a bulk of their shares. Do you see the Chinese owning these publicly listed companies, having a large position on the shareholder roster? Do you see that as a positive for these companies, or do you see it kind of as a corpse?
You see it from both sides, you know, because they look at the situation that they have an equity interest, but on the other hand, you see that they also direct participate in the projects, because they spent a lot of money, specifically, let's say in Niger, and in the early stages already, before the Fukushima division, because you had a lot of transactions, hundreds of $millions, let's say, for certain projects where a lot of money was lost. So they learned from that. So you see that they start to get a participation in a project, but also you cannot generalize that. Also, depending on their foothold already in a certain country, that they buy the shares. I would say they are more interested in the project than in the shares.
I got to be honest with you. I haven't seen a lot of positive come out of this where a Chinese company has a significant shareholder ownership in most of these companies. I have not seen where there's actually been anything positive come out for the shareholders, with the exception that I will mention that Robert Friedland, Ivanhoe Mines, Robert somehow seems to manage these people quite well, but I cannot think of many other who can actually do that. So let me ask you this too, on another note. What do you see as kind of, when you look at these companies, do you kind of see the finances as a number one, the mineral deposit as a number one, or do you see management is really important when looking at these companies?
Management is not that important, I guess, only with Robert Friedland, because he is famous all over the world. He has long-term connections, of course, in Asia, and specifically with the Chinese companies. But when you look, let's say, at the management of other companies, the smaller companies, all of them don't have a good record.
That's correct.
There's no exception. Even I think Cameco fails to have let's say, strategic vision on what's going on, because they have still a lot of money in the till, as you might know. What I see is that I say, well, when you are so positive about, let's say, the uranium price, that you are waiting for better circumstances, well, Cameco is the one who should actually give the starting signal and say, well, listen, I invest a part of my money in the uranium market. Why shouldn't they buy at 25 when they are waiting for 40?
You know, and it'll be interesting to see what they end up buying in the spot market this year with some of their
That's right. You don't have to be an expert. That is just, common sense, what I like to call it, you know. So if I don't, they mention, let's say, in their reports, they will do so, they're coming out in 2 weeks with their annual report, that they say, well, listen, the market, all kinds of action is going on. So why shouldn't they more active? And Cameco, you know what they spent into the ground? Only $37 million a year. When you look, let's say, the big successful companies are new companies. After the accident in Japan, Fukushima, and they are very successful, like Fission and NextGen, you know. These are the only two successful companies. And then you can say, well, listen, there's management to the account of management, but it takes at least 5 to 6 years before they can produce. And nobody can look, let's say, at that far and give a concrete opinion about the possibilities. And when you see when they have a market capitalization NextGen of 800, it's out of order.
So what do you like, speaking of Canadian Athabasca Basin plays, what do you like up there at this moment?
What I like there, I'm writing a report on it. I started with 30 companies. At the moment, there are 15 companies, and there's only 3 projects, let's say, which have some, are prospective, but I also see there actually that specifically that there's only small companies there. When you look, there's, let's say, only 5 companies with a market capitalization above 50 million, and 15 of them have a market capitalization less than 10 million. So, this is the casino, you know. At the Athabasca Basin, they say, well, listen, it's the best camp in the world and so on. Well, it was. And it got the stimulus actually for NextGen and also from Fission Uranium. But after that, nobody has been successful. Only 2 projects from Denison Mines. And let's say there's 2-3 companies working, let's say, on projects, but with market capitalizations of, let's say, 20 million. You can't say, well, this is worth to invest in.
Well, I want to switch over to back to Namibia. So the Chinese bought Rossing. What do you think the Chinese are going to do with that old Rossing there? Do you think it's for internal purposes, or do you see the Chinese producing there and selling into the market?
I think they are producing there.
With Husab as well, do you see the Chinese? Do you see the Chinese kind of keeping this stuff for themselves on their own reactor requirements in China, or do you see China selling this stuff into the market?
Yeah, for their own actually, and I mean they will also sell, of course, their own reactors there. They finance the infrastructure, and that's very important, of course, that they really can dictate on the money they have available what's happening in the countries. And I mean, some of it will disappear in the pockets of the country leaders, but I mean that's the name of the game, you know. We always say, well, there's a lot of corruption and so on, but when you look, let's say China doesn't care too much about it. They have the economic priorities.
So with some of these other companies that have showed up recently, like Uranium Royalty Corp, Yellow Cake, and so forth.
Small amounts. Yellow Cake, 100 million. I mean. Well, I mean, Yellow Cake and these others. Well, what was the effect? I mean, the stock price recovered from 20 to 29, and now for more than a month, it's still not broke to the 30 level. So what are we talking about? Because everybody says that we need at least 40 to get more confidence and maybe more action from at the exploration side. I mean, there's still operation losses for the companies, for the producers right now.
So Cameco needing to buy more in the spot market to fill contracts in 2019. Do you see the price getting above 30 in 2019? 35?
Yeah. Well, you know what they did, because they need actually to buy the market because they have a lot of commitments at higher prices now, but they don't have actually enough to deliver. So what they had to do is actually they asked the market to put 500,000 tons available. They wanted to buy, and what they think that people want to sell it for $25-30. I mean, when at the same time it is said that in a couple of years or even earlier, because people are too optimistic that they can get $40. I mean, it doesn't make sense to me when they think that people will sell, let's say, at 25 to them or 30 even.
I want to talk about long-term contracting for a moment. So, as you know, post Section 232, the U.S. utilities who need to recontract over the next couple of years will probably have a significant amount of contracts taking place between 2020 and 2024. Do you see that there is enough supply right now for those utilities to be able to contract? And at what prices do you think that all these utilities will get all these contracts? Do you see it all below 50?
Yeah. Well, I don't see it, let's say, as a threat to the market because, as I said already, there are long-term agreements already. The reserves are available right now. So, I mean, also for the future, this is also based, let's say, on possible reactors which need actually uranium, but that doesn't make sense actually. It's only for an increasing number of 20 maybe a year. What you also don't see is that, let's say, you have to replace reactors. So when you see the net need, it's much smaller actually than what is said, what you really need in the future of new reactors.
Okay. Well, yeah, I think that there's some interesting points on, shutdowns and how that's going to affect.
That's right. But do you see that mentioned? You only see that they say, well, listen, there's a shortage of this, there's a shortage of that, but they don't say what the surplus is directly available from Kazakhstan, who can feed the whole world, and also, let's say, the old reactors, which will not add actually any more to it.
Well, I see. It's interesting. The French just mentioned that they are not going to even consider. They just moved it out 10 years. I mean, yeah. You do recall that the president there said we're going to move it from starting to wean off nuclear and shut down some of these plants 2025. Now they're saying 2035.
That's right. But so you see, even with these reactors, I mean, they are exporting, of course. They need the uranium, but they have the uranium for the full number of reactors. So, I mean, if they are not there anymore, you don't need actually the uranium they are using right now.
So you think speaking of global supplies, you think that Kazatomprom and some of these other governments, do you actually think some of these governments like Japan and so forth, do you really think that they're still in the market looking to sell uranium at these prices?
No, I don't think so. And with Japan, Japan should be because that's an example actually of the economic value of uranium, because everybody thought, well, listen, uranium would be out of the question in Japan, but and actually pointing at it, that they will go again to, let's say, between 25 and 30 reactors. And let's say the uranium is still available there, because you had some stories at the time that they might sell in the market, but they don't sell in the market. They have a lot of reserves available. And that is also a point which makes it very difficult to make a valuable, fundamental proposition there, that they need actually, they are with 20 new reactors, let's say, 25 reactors maybe, they need much less uranium than they actually needed at the time of the Fukushima disaster. So they hold on to it, and they will not sell actually. They will keep it as a reserve. And when you don't have insight in the reserves of Japan, not in the reserves of America too, because that is a strategic point, then it is also very difficult to make some forecasts on how the situation will be between demand and supply. But again, I don't see actually very bullish elements where you say, well, the price goes above, let's say, 40 within the next 2 years or so. And I was even surprised when it will be 40 on the shorter term.
I think that there is not one government out there that's selling uranium, and further to that, not all of this uranium that the government holds is sitting in a barrel. It's not yellow cake in a can. It's also fuel assemblies that are waiting to go to utilities, and utilities have fuel assemblies as well that are manufactured. Do you think Japan doesn't have any inventory of just fuel rods and so forth for the utilities? Because what I would say is even though the governments have substantial supply, there is not one government today that's selling into the market at $29 uranium.
Well, I totally agree with you, and we already discussed that earlier. So that is the situation as it is.
I want to ask you about underfeeding. With the SWU price where it is, and it's starting to move up a little bit, do you see underfeeding at this point as a kind of weaning off, given the SWU price?
No.
You see underfeeding continuing at a higher rate, or do you see it declining with the SWU price being down?
No.
I would just say whereas the SWU price used to be very, very high, and with a high SWU price, obviously it makes sense. There's incentive at higher prices to produce more with underfeeding. Whereas when SWU prices are low, why would you do underfeeding when the price is so low? So there's no incentive to do heavy underfeeding.
No, I agree with that. Yeah, the situation is as it is, and I don't see really a driver to get the uranium price higher. It's a game between Cameco and Gazprom, because they are the big companies, of course, and Cameco has big problems because they need a lot of uranium to fulfill their commitments, their contracts, and that could be even a tightening situation. So I certainly would not buy Cameco right now. When you see that, let's say, their production will halve 2080 compared to 2017, and I don't see actually an opportunity that they can reopen their other projects or projects other than they are only working on one project right now.
Well, Kazatomprom certainly with their supply cuts and the fact that Kazatomprom has not spent a dime on exploration and increasing reserves, that it certainly points to they certainly seem to be getting a little bit wiser, wouldn't you say?
Yeah.
Yep, and as a public company now with their own pension fund being directly involved with how the returns of that company go. So it'll be interesting to see how how things kind of play out going forward and see what happens with Section 232. And it certainly is a exciting time.
Hopefully that works, but just for the natural industry, of course. But they really need it from an economic point of view, because also the United States have their contracts with a number of countries. Like I said,
right.
Of course, with Russia through Canada, and directly with Kazakhstan, and then also with Australia. So they really don't need it. So happy, let's say, with the 7%. It's just a point, let's say, by outsiders that it says, well, it brings the United States in a weak situation, but it isn't.
So, Marino, how can investors reach out to you for more information, and how can they get access to your research?
Well, they can go to my website, and so that's if they have some specific questions. I mean, they can also be in direct contact with me.
Okay, that sounds good, and I see also on your Twitter here there is a handle at Metal Commodities IP is your Twitter handle. So. Well, Marino, I appreciate you taking the time with us today, and
you are very welcome. Okay, thank you.